Your roadmap to the latest in auto. Welcome to Highway Herald. Canada is steering toward one of its boldest trade reversals in years. For months, Ottawa's 100% tariff on Chinese EVs stood like a steel wall around domestic automakers. But Beijing hit back, hammering canola farmers with crippling duties. Now, Prime Minister Mark Carney and his cabinet signal change as pressure mounts from both fields and factories. Buckle up. The outcome could redefine Canada's economic future. How the tariff war ignited. Cars versus canola. The trade clash erupted in October 2024, when Canada slapped a 100% tariff on Chinese-made EVs. Ottawa framed it as a lifeline for domestic automakers, arguing China's booming EV industry was fueled by heavy subsidies that could drown Canadian factories before they gained traction. The tariff was designed as a shield, buying time for manufacturers to invest, adapt, and survive the global electrification race. But trade doesn't happen in isolation. Beijing retaliated with surgical precision, targeting Canada's agricultural Achilles heel. Within months, duties on canola and other products skyrocketed, with canola seed hit hardest by a crushing 75.8% tariff. For Saskatchewan and the Prairie provinces, where canola is an economic lifeline, the fallout was immediate and severe. What began as a battle over cars spiraled into a collision between two vital industries, automakers and farmers. The crisis exposed a fundamental truth. Every trade maneuver reverberates across sectors, and protecting one cornerstone can destabilize another. And as the pressure mounted, the government in Ottawa soon realized it couldn't hold this hardline stance forever. Ottawa hits the brakes. Signals of change. For months, Ottawa insisted the 100% tariff on Chinese EVs was untouchable. Officials portrayed it as a non-negotiable shield, a safety net Canadian automakers needed to survive in a global race dominated by subsidized Chinese competitors. But by mid-2025, the cracks began to show. Farmers, already battered by China's retaliatory tariffs, warned that losing access to their largest buyer was unsustainable. With the canola sector alone valued at nearly 43 billion Canadian dollars annually and supporting more than 200,000 jobs, the stakes were no longer just high, they were existential. The breakthrough moment came when Saskatchewan Premier Scott Moe made a high-profile trip to Beijing. Initially dismissed as political theater, it soon drew public praise from Prime Minister Mark Carney, signaling Ottawa's openness to a reset. Foreign Minister Melanie Joly admitted the tariff was under review, and Agriculture Minister Heath MacDonald bluntly confirmed reassessment was on the table. This wasn't a weakness. It was a necessity. Ottawa was finally easing off the gas pedal, shifting from rigid confrontation toward pragmatic recalibration. But as Ottawa began to soften its stance, another reality hit hard. The very policy designed to protect Canada's auto sector was dragging the industry into deeper trouble. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to bring you the latest updates, deep dives, and insights into the automotive world. When protection backfires, the EV market in peril. While the farming fallout dominated headlines, Canada's auto market was quietly stalling in the background. Ironically, the very tariff meant to safeguard the industry was helping to cripple it. By mid-2025, EV sales had collapsed by nearly 40% year over year, a nosedive that rattled dealerships and policymakers alike. Once a rising force with over 18% of new registrations, EVs had sputtered to just 8.6% by the second quarter. The issue wasn't consumer doubt, it was affordability. Premium EVs left on the market were priced too high to qualify for federal incentives, while provincial rebates were evaporating. Quebec barely kept its program alive after backlash, and British Columbia axed it entirely in May. With fewer incentives and higher prices, adoption rates fell sharply. Chinese automakers, known for budget-friendly, feature-packed EVs, might have bridged the gap, but the 100% tariff rendered them uncompetitive. Ottawa backpedaled, shelving its 2026 zero-emission sales target and offering relief funds, but the damage was done. Instead of accelerating electrification, Canada's EV strategy had shifted into reverse. And just as Canada's dealerships felt the pinch, prairie fields were suffering an even heavier blow. Fields in the crossfire, canola's fight for survival. While Canada's auto sector struggled, prairie farmers were hit even harder as canola became collateral in a geopolitical trade war. China's crushing 75.8% duty on canola seed effectively shut out Canadian exporters, sending futures tumbling over 6% amid fears of oversupply and shrinking demand. For Saskatchewan, where canola is not just a crop but a way of life, the blow was devastating. Farmers warned that another season under such conditions could erase family operations that had sustained communities for generations. Once worth nearly 5 billion Canadian dollars in exports to China, the industry now faced the grim reality of losing its most important customer. Ottawa projected confidence, with Agriculture Minister Heath MacDonald promising aid and Carney's office citing Premier Scott Moe's Beijing mission as progress. Yet frustration grew on the prairies, where many felt sacrificed to protect Ontario's auto jobs. Farmers didn't want bailouts. They wanted restored access. Each passing week of tariffs deepened losses, threatening both livelihoods and rural communities. With two vital industries squeezed from opposite ends, the looming question became, what path would Ottawa choose next? Crossroads ahead, risks, rewards, and the road forward. Canada faces a pivotal decision. Keep its 100% tariff wall on Chinese EVs or shift toward a more pragmatic strategy. Each path carries significant consequences. Rolling back the tariff entirely would bring immediate relief to farmers, reopening China's massive canola market and easing tensions with Beijing. It would also allow an influx of affordable Chinese EVs, potentially reviving a domestic market that has stalled. Yet such a move risks backlash from Canadian automakers already under strain from U.S. tariffs and fierce global competition. A middle option could involve lowering tariffs or carving out exemptions to ease consumer costs while maintaining some industry protection. Ottawa could also pursue diversification, strengthening imports from Japan, South Korea, and Europe, while negotiating with Beijing for agricultural concessions. The boldest strategy would be leveraging tariff removal for Chinese investment in Canadian plants, turning risk into opportunity. Whichever road Ottawa chooses, the decision will echo across farms, factories, and families for years to come. And that brings us to the final verdict on Canada's next move. Verdict: the turning point. Canada is racing toward a defining choice: maintain a rigid 100% tariff wall or pivot to a strategy that brings relief, revival, and resilience. Over the past year, tariffs bought time but failed to create momentum. EV sales collapsed, consumer options shrank, and prairie farmers bore the brunt of retaliation. A smarter path would tie any rollback to clear gains: restored canola access, firm investment commitments from automakers to build in Canada, and diversified imports from partners like Japan and Korea to keep pricing competitive. With that balance, trade access, jobs, and affordable EVs, Canada could transform a damaging standoff into an industrial opportunity. The decision ahead won't just affect car prices, it will define Canada's place in the global EV race. So what do you think, gearheads and policy watchers? Should Ottawa tear down the tariff wall completely, even if it means a surge of Chinese EVs? Can farmers and automakers both win, or will one side always pay the price? And if tariff relief is tied to foreign automakers investing in Canadian factories, is that the smartest way forward? Drop your thoughts in the comments. We want to hear where you stand on this turning point. Don't forget to hit that subscribe button to stay tuned for the next round of updates and deep dives into the stories shaping the auto world. Thanks for watching Highway Herald, and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.